Time for another stock review, this time Aquestive Therapeutics, ticker symbol AQST. We're back in the lab again today, talking therapeutics, pharmaceuticals, all this kind of stuff. This is a very volatile stock. However, if they get it right and it comes through the research well, this can present a great opportunity for those who wish to invest and turn on the printing machine. But of course, it's very, very high risk as well. Without further ado, let's get straight into the review. Now, I present the most honest reviews that you're going to see on YouTube TV. No one from the company sponsored me to pay me to make these videos. They all rank, nearly all of my stock reviews rank at number one on Google for the stock ticker, which will be AQST stock. If you type that in a week from now, I would imagine I'm number 1 or 2 for the stock. We do have Meet the CEO. The CEO is invited to be on the show. We have a whole CEO series where I interview the CEOs. They love coming on the show because it's a much more friendly, relaxed approach. It's much more honest. We have a really passionate audience and we're growing 1,000 subscribers a week and we're doubling our rate of growth every month or so. So that's great. Now I'm going to share with you the most honest review. You're going to see lots of information in this report. You're going to see the website, a full back test to the S&P, the latest news, what's going on. We're also going to take a look at the basic information here first of all, and then we're going to go into the financials. I'm going to share with you the profit, the loss, the balance sheet, the latest earnings report, what we picked up from that, the solvency score, the profitability score, inside trading, short positions, the whole thing, so you can make an informed decision of whether it's right for you to buy or hold the stock, whether you can make money from this stock, whether it all stacks up and you don't have to scratch your chin around and go, should I buy this stock anymore? So we're going pharmaceuticals. Of course, we're always talking about the white powder when we look at stocks like this. And hopefully you'll find this information useful. And it's not financial advice, and full disclosure, I only own the S&P. I don't pump and dump stocks at all. I'm trying to grow and build the most honest channel on YouTube TV. I only own the S&P, but I am fully invested. All my money is in the stock market. I use my Robinhood account as my bank account. So please tap the like, subscribe, and ring the bell if you like this video. Now, if you like the CEO on the series, in a few moments when we highlight the CEO's name, I will share with you how you can get the CEO on the show. Yes, you. I never message anyone. I don't believe in selling myself. The policy is undersell and over-deliver. I never message anyone. They all find my channel through the algorithm and the way it works, and just being trending on YouTube and Google, or the investors reach out and ask them to be on the show, or they just find out themselves. It happens all the time. Let's go, without further ado, into the stock and find out what this company is all about. Aquestive Therapeutics. I hope I pronounced that correctly. Aquestive Therapeutics, AQST. Right, let's start off nice and simple. Now, we are making this during a live broadcast. This is happening live. I edit my videos live. Everything you've seen so far is happening live. I don't like to make things afterwards and fiddle around with them. I like to do them live as everyone sees it, so you know it's real. I've built the machine that builds the machine, so I'm able to do all these effects and overlays live as I'm reading it live for the very first time. I make no apology for that. I get asked to do so many reviews, over 100 now. I am reading it for the first time, just like a TV news reporter is reading the news off a teleprompter. I am reading all this information with you in real time for the first time. So mistakes do happen, particularly on stocks like this. When I say mistakes, I don't mean financial mistakes. I mean the technical words on pharmaceutical stocks. They always throw long words at me, but nevertheless, we'll do our best. Here we go. What is Aquestive Therapeutics? If we look at the basic long line chart, and we'll start off basic and get more detail as we go, you can see that the stock bounced up to $18 and then fallen away, and it's volatile. As you'd expect, from this kind of stock. These kind of stocks, when they're trialing, when there's good news around, the stock can pop up, it can come back down again. There's no dividends here. It's a growth stock, but when it gets it right, it really gets it right. Is it a good time to buy it right now? Well, we can see the stock is now at $5.12. Anything under $5 makes it a penny stock. It's been a penny stock. It's been 90 cents. Right down here, or 78 cents even. It's not a penny stock today. It's above $5. I bet they prefer that. Aquestive Therapeutics engages in the identifying, developing, and commercializing of differential products to address unmet medical needs and to solve patients' therapeutic problems. Its product pipeline include, here come the big words, Libervant, AQST 108, AQST 305, Suboxone. I always wonder why medical terms have to be words you can never pronounce. Why can't you just call it an aspirin or stuff like that? The old-fashioned words. Maybe they've used all those words up and now it has to be really complicated words. I don't know. Anyway, there it is. Suboxone. See, that could just be Subo, couldn't it? Could be just Subo. No, Suboxone and Zuplenz. Zuplenz. Maybe they do it so other people can't copy their names. I don't know. Never known why. Anyway, the company was founded in January 2004, so it's been going like 20 years, and headquartered in Warren, New Jersey. The listed name is AQST, Aquestive Therapeutics. All right, founded in 2004, New Jersey, in Warren, 135 employees, and the CEO is Daniel Barber. So how do we get Daniel Barber on the show? Well, they'll probably find this video because it will trend on YouTube and Google. But if you are an investor, you can add this video along with my invitation to the CEO video, which is called Invite the CEO. It's down below in the description of this video, and you can go and get the link for that and send it along with this video to the investor relations, or you can email or create a social. Maybe you'll create a social page on Reddit or Facebook or a group, and you share it, and they get to hear about it, and you invite them. And I'd love to have Daniel on the show and learn more about the company. We're here to help companies. I'm not sponsored to say anything great. I just want to share great news about great companies so employees get employed and investors make money. That's my job. That's what I do. If you buy this on margin, it's 50% margin maintenance, which means it's regarded as mid-risk. It's not 25% like the S&P, and it's not 100% like Mullen and a complete joke. It is actually regarded as mid-risk, okay? So using margin is risky, but this one is mid-risk. Average volume is 4.1. It's low volume. Low volume, and the volume today is 293, below average volume today. No dividend yield here, as you can see, 52-week low, 72 cents, 52-week high, $5.75. So some volatility recently over the 52 weeks. Okay, let's have a look. Insiders selling, well, we'll find out about that shortly. That's some news just in. Now then, Morningstar review the stock. I don't use these reviews to make my analysis on a stock because they are paid to do it, sponsored to do it. And there's if you ever want to get in the stock market, you will know it's manipulated. Very difficult to win, very difficult to navigate. Everyone is in for themselves. It's the world of greed and selfishness. And unfortunately, that presents opportunity as well. But you also need to be aware that a lot of these reviews are sponsored, paid for, and it's like JD Power tells you how great someone's car is. Well, they're a marketing agency employed by Chevrolet to say how great their cars are. Ridiculous, right? Well, there you go. Morningstar are one of those type an analyst paid to review, and of course, I'm sure have incentives. But nevertheless, they say it's a strong buy. What's great, gives you a guide. And if we look at the earnings, things are moving up. We had a great Q1 of 23. So go and check the investor history and see what created this event and see if it can be replicated in the future. But we are overall consistently, generally beating on earnings. However, on the most recent earnings just happened, and we're going to cover that in a moment, estimated was to be still losing money. We're not making money yet, but we are moving in the right direction. To be fair, we are trending up. There's a definite trend here, moving up. We were expected to lose 8 cents a share, and we lost 10 cents a share. So we missed on earnings. However, as we know, you can beat on earnings, stock goes down. You can miss on earnings, stock goes up. It's about the guidance, and the guidance is most important, and we'll present the guidance in a few moments. But as you can see, the stock is actually up today, 0.59. The stock is up and has been trending up since March the 11th, the last few days before earnings, and we are moving up now. Okay, let's have a look. Who else is investing in this company? This gives us the sentiment of the stock, the movement of the stock. What we don't want to see here is a mullen or a scam stock. That just means it's being shorted. It's got gamblers all over it. I've not reviewed this one. Neither this one nor this one. SNDL, I'm about to review it. I'm about to review Zomedica as well. So I'm about to review 2 of these, but I've not done so yet, so I cannot give a comment on it. I don't know how this will trade because I've not reviewed any of those stocks that are other investors are in. All right, let's now move over to the website and learn a bit more about the company, find out a bit more about it, see if we can make money, and let's go and have a look. So we'll start off with the website, and then we'll go into the latest news. If you like this video so far, tap the like buttons, click the subscribe, ring the bell. That would be absolutely great. Well, without further ado, let's get into the website. This is Aquestive, I hope I pronounced that correctly, .com. Good news is it's a secure website. We did another pharmaceutical company a couple of days ago, and it was an unsecure website, a complete and utter scam, and I reported on it. Awful. How can a publicly traded company not have a secure website? I mean, that means their IT department haven't got a clue what they're doing, or they're intentionally trying to scam people. The good news is this is a secure website. HTTPS security. Okay. Our quest is advancing medicines, solving therapeutic problems, improving lives. 18 years, 2+ billion doses and counting. Our pipeline of medicines aims to overcome barriers and that patients face with existing treatment options and provide new paradigms for treating critical and complex conditions. All right, let's read a couple of the headlines and then we'll look at some latest news. The pipeline. Aquestive Therapeutics is the undisputed leader. This is, of course, their website in developing and delivering medications via film through our proprietary farm film technology. We've used our expertise to create a robust proprietary and complex molecule portfolio. There you go. What else have we got here? We won't do much more here. I'm going to go on to the latest news and then look at the numbers. Reimagining how to treat anaphylaxis. Anaphylaxis? I like that. Anaphylaxis is a serious systemic hypersensitivity reaction. Aquestive is developing AQST 109, a sublingual film that, if approved by the FDA, remember, with this type of company, trials can go well, but then we need FDA approval, and that's when it explodes or crashes because all the money we've invested so far goes down the toilet. Let's hope this isn't one of those. The FDA approval will allow patients to simply place a dissolvable strip approximately the size and weight of a postage stamp under the tongue to provide rapid delivery of epinephrine when it is needed. I hope I've pronounced that correctly. Okay, let's have a look now at the latest news that we have on the company. This is what we have, the latest news, other than the earnings, of course, and we're going to cover that in a moment. Aquestive Therapeutics to present aniflim. I hope I pronounce it again correctly, sublingual film pharmacology. It's like a joke, isn't it? How hard can we make it? And pharmacodimia. I think people request these on purpose. Data at the 2024 AAAAI annual meeting. Even that is ridiculous. AAAAI annual meeting. I reckon they could make this easier. Anyway, let's just read this. The clinical trial data. I apologize that the text is small and I'm going to look on my mirror screen because it's very hard for you to see it. I appreciate, so I'm going to look to the left on my mirrored screen. The clinical trial data show that epinephrine delivered via orally administered anaflin sublingual film is comparable to epinephrine delivered via auto-inject injector or manual, this is the worst one ever, intramuscular injection. I'm going to pause it there. If you want to then pause this screen and zoom in and read more on the report, I was right, says Kevin K. This is the person that asked for this request today. You're right. You're right. Thank you, Kevin K. I hope I'm getting this right. I hope I'm doing it justice. All right, let's now move on to the numbers. At the end of the day, we're investors and we want to know, can we make money from this stock? So before you get your credit card out, Mr. Jordan Smith, and start writing those checks, does the money stack up? Let's go through the numbers. Let's mull it all over, and let's see if we can make some money from this stock by looking at the most important numbers. Let's start with the intrinsic value. Shall we do it? All right, let's get straight into it now. Please do tap the like button if you like this video. The stock is going up as we speak. I will tell you now, we will rank number one for this very, very shortly on Google and YouTube. And very often what happens is when our reviews come out, if they're bullish, and I haven't given my opinion yet, then the stock tends to go up, even if I'm negative, because the stock gets a lot of attention. And if there's some good in it, it can draw attention to the stock. Anyway. Looking at this, it says today, at what the price we're paying today is overvalued by 45%. Now, we need to explain this as the intrinsic value. The intrinsic value with the numbers that we have isn't reliable because it's unreliable because it's based only on multiples and doesn't use DCF valuation. So the valuation may or may not be accurate. Okay, the overvaluation is 45%, worst case scenario, 47%, best case scenario, 42%. Now, with a stock like this, with something that can explode very quickly on FDA approval, we can overpay for the stock because people are getting excited and ready for the news. So you can overpay, and I like to pay 25% overvaluation. That's kind of my target. More than that, it gets a real gamble, right? But just so you know, the intrinsic value of this stock is not accurate. We cannot rely on it. There is what an intrinsic value is. If you pause the screen, you can have a look at that and see if that's of any use to you at all, so you can understand what the intrinsic value is. However, over time, we can do a back test and see how accurate the valuation is. As you can see, correlation to its price is just 5%. Okay, so the intrinsic value isn't that reliable on this stock. However, we do have the very latest Q4 earnings. Very nice indeed. Here is the Q4 earnings just out, and let's read this. Now, remember, it's about the guidance, and the stock, as we talk about it, is going up 3.3%. It's looking nice today. Let's have a look. Aquestive Therapeutics strengthened its financial position by renegotiating a $45 million debt refinancing deal with a 13.5% interest rate. Wow. So they're paying a lot of money for their debt right now, and they've refinanced their deal, so they've improved their position. But that's a lot to pay for debt. Anyway, which reduced near-term cash requirements and eliminated revenue or cash covenants and stock purchase warrants. So they've improved their position, but Still very expensive. We're going to come on to the debt position in a minute. This was paired with significant revenue growth. That's good news, as Q4 23 revenues rose to 13.2 million, a 24% increase compared to Q4 2022. Very, very good. That's good news. Things are moving in the right direction. And the fact they've been able to refinance at a lower rate, even if it is expensive, is because things are improving with the company. That's good. Bullish sign so far, even though that debt is high. We'll come on to that in a minute. The full year 2023 revenues climbed 26% to 50.6 million. Good. Excluding prior year sales of Sympazan. The net loss decreased to 8.1 million in Q4, improving from 12.4 million in 22. Good. Their loss has been dramatically reduced. That's good. The guidance for 2024 sets revenue targets between 48 million and 51 million, but does not include any sales of Libervant. That is good. So this is a bullish outlook for the stock. We like that. So far, it's a bullish signal, but let's get to the valuation on the balance sheet shortly. Revenue, we can see here as our last reported in December, which is what we've just reported on the earnings now, revenue was up 5% on the most recent range. And the good news is through 24, it's going to be slow, but then we are going to get a nice potential S-curve here in 25 into 26. Outlook is good on the revenue. Operating income is up 31%. Good, but we are expecting it to go a little bit down and flat for a while after that than the operating income. Net income is also up 35%, but we do anticipate analysis. This is not them. Analysts are expecting the stock to go down into the future, not the company. We need to remember that. They're saying we expect things to do well, but analysts are saying, we see revenue going up, but we see net income going down. All right, so we'll just want to make that clear. Operating cash flow is negative 6.4 million. Investing cash flow is 0.5% down slightly. Investing cash flow, financing cash flow, that's a big improvement, as you can see, up 1,428%. That's probably to do with reducing their debt position, or at least refinancing at a lower rate. What were they paying before? That's what scares me. Anyway, here we go. As you can see, the balance sheet is a little bit scary. So far, the outlook is improving. Things are improving, but their balance sheet is a flipping disaster. Let's be honest. 57 million in assets. 23 million is in cash. Good. Half of our assets, just about, if we look at the pie chart, half, or 41%, is cash. So we do have some money on hand, which is great. But look at the debt position. This is a company that is borrowing money to have the medical breakthroughs. That's very much how it can go. But normally, and what we hope for though, is we've got a well funded business with loads of cash of its own without borrowing money at those rates. Now, of course, we're expecting rates to come down in the future this summer. That will help the business. They've just done a refinancing package, but they're still paying a lot of money to borrow this money. So they have to make good returns just to service their debt. So 57 million is assets, 163 million in liabilities. Long-term debt is 27 million. So they've got a lot of debt here, an upside down balance sheet. They owe a lot more. They have a lot more going out than is coming in. That's not good. You can't go on like that for very long. So that's why the stock price is down, but it's gone up today. That's because of their refinancing package and the expectations for the company. So maybe this is still a buy because the outlook is good. They're borrowing money, but they've got an upside down balance sheet. Let's be honest. It's a lot. But the majority of their liabilities is current liabilities, not long-term debt. 27 million is the long-term debt position, which equates to about 16% of their liabilities. The majority of this is just accounts payable, long-term, just running of the business. So it looks bad, and it is bad, but they're investing to build the business. So, their outlook is looking good and the stock price is moving up. Let's look at the overall efficiency of the business. 59% margins, good margins, but again, you've got to compare to the competition, and we'll share with you the competition in a moment. But things have moved up. It was 55, 59%. It's moved up. We don't know what the expected projections would be, but the guidance suggested we're doing better going forward into 25 and 26. Operating margin is improving, but still negative. Net margin is improving, but still negative. As you can see, most things are improving, just still negative. All right. You might want to pause on the free cash flow analysis. And again, you can get more information by using my links to this software. All this software is out there for you. I presented it all for you here. You can get this. My members can get access to this software for free. They can also get access to the premium service of this software that I am using with a lifetime discount, which makes my membership for free, by the way. Really, really good. Now then, let's look at the profitability score. You see, things are moving forward in a positive light. Exceptional revenue, 3-year growth. This is good. Positive gross profit, good. ROIC is increasing. Positive revenue growth forecast is just amber. That turns green. We're over 50%. So profitability is good. 42%, and things are improving. That's what you're buying here. You're buying a stock with a lot of liabilities at the moment compared to assets, but a good guidance, a good potential future. They've been able to refinance. They've got some cash, which would suggest, and we'll see it for the first time now. There you go. They're not going bust. It's not a bright red 20% solvency score. It's 34%. It's only got a positive net debt. Bring this down and we'll be in the 40, 45s and start turning green. Long-term solvency is not looking great at the moment, but short-term solvency is good and low DE is good as well. 34%. So it's not going bust in the short term. It's okay. It's managing to reduce its interest payments. We would expect that to come down. We're expecting guidance to break through, and of course, we've got some good news. We talked about it in the news section at the beginning of the video. There's a potential buy here. There's a potential buy. If you like this kind of stock, which is high risk but high reward, it's not going bust. It's improving its position. The stock is now trending up. There's a potential here, potential buy. That's all I'm going to say so far. Wall Street analysis, give it an 18% upside. Well, on the S&P, you're only getting between 12 and 14%, with inflation and all the rest of it. 18% worst case scenario at the lowest level, 58% on the average, and 104% on the high. If FDA approval comes and all things go well, things are looking good over the next 12 months. So very nice projections from Wall Street there. I talked about the competition. If you use my software, you can check out the competition and you can go and see for yourself how it stacks up. And I'll give you the link for that in a moment below the description of the video. Now then, this is not so good though. We do see in the last 12 months, insiders have not bought any shares, but they've sold some shares. They've sold 129,000. So even though they've sold, it's a very low level. It's a very low level. They're not dumping the company at all. It's a very low level, 129,000, nothing major there. And that was by the Chief Innovation Tech Officer who sold 129,000. Now, when it's low levels like this, which it is really, It can be for tax reasons or just administrative action. It might not be sentiment. It's only one person, only one transaction, not a lot going on, and that was done. That was done in the last 3 months. Okay, no buying going on at the moment. All right. Short interest. Well, we have a bit of short interest, but no volume on the stock. No excessive short positions, 20% and upwards. So you're not going to get a short squeeze here. There's no short squeeze interest here. And the negative sentiment isn't that much, 3.84. Well, you're going to get some negative sentiment on a stock like this, but not that much. So that's quite bullish, I suppose. The stock has some negative sentiment, but, all stocks have some. Even like Apple is like under 1%. There's all some, but 3.84 isn't anything to shout about. However, what isn't great, and where our video is going to play a big part, there's no latest sentiment. There's no latest coverage. There's no media coverage. Nothing has been picked up here. Normally down here, we have news and sentiment. There isn't any, which means I will rank number 1 for this stock within a week or so. And because my review is going to be, and I will give you my final view in a moment, it will rank, and I would say the stock will go up. So I've already kind of given it away a little bit, haven't I? So let's go over to my final thoughts on this review. The stock is green today because potentially we have a good Wall Street analysis of this 58 to 100% growth this year. We've seen our solvency score improve. It's 34%. We're not going bust. We've seen our profitability score at 42. That's pretty good. It is a kind of upside down balance sheet, but long-term debt is 27 million when we do have 57 in assets, and we do have 23 million in cash, so we can actually pay off our long-term debt. It's only ongoing expenses which makes the balance sheet upside down. We want to see more assets than liabilities, right? However, we are seeing revenue improve, gross margins improve, the outlook improve. This could be an opportunity to buy. So I'm going to give it a potential buy. As we can see, it's going well today over the last 3 months, up 159%. Things are edging up. I can just move that up. You can see the year to date looking very nice indeed. The 1 year is up 581%. I think it's a potential buy. So I'm going to end this video there with saying I believe that this is a potential buy. Right now, the stock is green. Things are looking up for the stock. Need more research. Need to keep your eye on the FDA approval. But things do seem to be improving. Now, with rates coming down, that will help them as well. I would anticipate rates coming down in the summer. So click above my head for all the links that you might require on this video. My membership, the alpha spread, and all the rest of it. Also, the links to the full alpha spread review list. I've done over 100 stocks. Look below in the description of the video. You will find that invitation to the CEO. Get them on the show. You know how to do it. I explained that from the beginning. You will find that video and you can get them on the show. We'll learn more about it. Over here, there's more reviews. I've reviewed many stocks, and there we go. That's our latest review. Aquestive Therapeutics. I'm giving it a potential buy that's for further research. Until next time, as always, take care of yourselves and each other.